Morning, guys. It's the 13th of January. We are talking, we're Signal Centre and we're talking ball this morning. Joe Neighbour, Steve O'Hare, Ian Coleman. Good morning, guys.
Good morning, all.
All good?
Yeah, not bad, thanks.
Good stuff. Let's get straight into it then. So let's take a look at how we did on Monday on our trades. We had Friday. I'm all over the place this morning. We had a short trade on sterling yen, which made 4 ticks or 0.08R. So not much going on there. Steve, you had a short on Bitcoin. That was a 1R loser, unfortunately. And Ian, you had New Zealand dollar, which was a 0.74R winner. So a nice continuation of your winning streak there. So that's 8 out of the last 9 that you've called correctly, which is pretty good going.
No, I can't find anything.
So with that, Ian, it is your honour. You got anything you're looking at today? Anything you can cobble together?
Well, I like dollar Swiss, but a higher. Let me just share my screen.
Stop sharing.
Couple of setups, really. I think the dollar index has just hit some major resistance. So I think there's still scope for a small move to the downside, upside, in the dollar, but I think it's going to be limited. I quite like this dollar Swiss, but I'm going to have to stick a decent stop on, and it's going to mess with the R, but I'll have it anyway. Wedge formation, possible head and shoulders. Got some bespoke resistance here at 97.43, which is the prime short entry. But as this is gun to the head, I've got to take it here, which is there. Measured move is the base of the wedge as well. So it's not, let's get 2.5-ish. So selling dollar Swiss 97.31, target 96.82, and a stop at 95.70. Gives us just over 2.5R.
Cool. I'm going to take a look at FTSE just because it's just triggered on our daily or intraday analysis. I had a sell in at 76.25. It was just simply selling the that level there from the low that we saw on from this morning at 7 o'clock. Is that this morning? No, from the 10th, sorry. So yeah, just selling that, thinking it's going to run out of steam somewhere around here. It is trading in a bit of a range between sort of 76.83 down to this low at 75.25. So just looking really for it to stay within this range. I don't see there being any kind of big announcements or changes to the way the FTSE is
UK
trading.
news, isn't there?
Today there is a bit from what I saw, but
and there was one of the Carney obviously said last week that he's looking for more stimulus, and then we've had a guy out over the weekend saying that it'll all be disclosed on the 31st of January meeting.
Okay, so we've got a little bit of time
2
before
weeks.
that.
Yeah.
So I'm going to sell that this morning at 76.25. Stop at 76.55 with a target at 75.25. So that's 3.3R if that comes in.
Lovely.
Stevie, you got anything?
Yeah, I'm looking at Eurosec. I can't share though. Here we go.
Not working? There we go.
That's it. Just looking at Eurosec, I was struggling, looked at everything, went through them all, and nothing really I would touch at the moment. Eurosec's got a couple of decent patterns on it on the monthly chart. It's possible Morningstar reversal there, going to the upside again. We had a couple of inverted hammers here and decent movement over the last few weeks, so that's positive. The daily chart looks like a bit of a bottoming pattern, then possible correction. So I'm going to the 4-hour chart, and we can see there's decent resistance which it's trading at this point in time. So ideally buy a break, but we're buying it here. Let's see the risk reward on this. What is it? 10.57.75. the have a tight stop on it. And let's target this move back up to here. So yeah, 1057.75, targeting 1075, and stop at 1055.
6.4R was that?
6.27R.
Happy days. Okay, so news-wise, over the so on Friday we had employment data, obviously from the States. That was slightly under the consensus forecast, but reinforces the expectation that there will be no further rate hikes from the Fed. The payrolls increased 145,000 compared to the consensus forecast of 165,000 in November. Again, should mean that the Fed are probably going to keep rates on hold for the foreseeable future. This week, we have risk appetite holding firm ahead of the scheduled US-China trade signing, which is expected to take place on Wednesday. The National Economic Council Director Kudlow stated that the US-China Phase 1 trade deal has been translated and authenticated with a fact sheet, which is set to be released on Wednesday. He also commented that the implementation of the deal could boost US GDP by around about 0.5% for 2020. So a lot of optimism around that. On the flip side, in the UK at the moment, we have a very tight labour market, and there's been discussions or certainly chatter that we could see interest rates potentially cut. That is an option that's been left on the table. And also we, as Ian said, Mark Carney has been discussing the potential for stimulus as well in the UK. So, quite a contrast between the two economies as it stands at the moment, as we try and sort of get through this whole Brexit situation. Oil regained a bit of ground on Friday, but nothing significant, and I think gold continues to hold up reasonably well given the weaker US employment data. But overall, I think not really moving too much further, and certainly on the retreat still from the highs that it got to off the back of the missile launches last week. So all seems to be settling down on that front. Data-wise, Ian said we've got a fair bit out today. So
yeah, sterling industrial production, manufacturing production,
and GDP.
Trade balance, GDP, blah, 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 blah.
GDP is expected to rise from 0% to 0.1%.
There's a lot of Chinese data out overnight. So overnight markets might be a bit mental, but...
Okay. That's pretty much it then, unless anybody else got anything else to add for the week ahead?
No, just a little bit of risk
ahead
with Iran, I think. Just things could escalate there with protesters out on the streets.
I saw Trump fire out a few tweets.
Yeah, he was tweeting in Arabic at the weekend.
Yeah, I saw that. I
He's quite clever.
Translator, yeah.
Russian ruble has gone to a 20-month high.
Blimey.
Yeah, I think there's still. I think that's the reason gold sort of like seemed to have a bit of impetus on Friday. Still, obviously the risks are out there, so it just takes one silly tweet or one stray missile to escalate things.
Indeed. Okay, well, I think that pretty much wraps up everything on this Monday morning. Let's see how we get on with our trades. Good luck to anybody that's taken a look at them or got their own trades on this week, and we'll catch you again tomorrow.
Lovely.
Cheers.
Cheers, gents. Bye-bye.
Bye.